Consistency in profitability as a trader is a function of eliminating errors. I repeat, the ability for you to be able to make money from the market daily, okay, or weekly or monthly, okay, is the function of eliminating errors. So again, you will find out that you know almost everything about the market, but up to now you are failing to be able to produce consistency, meaning that you are failing to be able to make money that you can rely on the money that is coming from the market. If you're amongst those traders, I want you to stick around. I'm going to be talking about 9 mistakes that traders do every single day in front of the charts. Okay, the reason why you are not profitable might be one of these mistakes. Okay, stick around. The 8th and the 9th mistakes are the most common ones. So again, consistency in profitability is a function of eliminating errors, meaning that if you want to start making money from the market, you need to make sure that you eliminate all these errors that I'm going to be talking about. Okay, some errors you might have corrected them already. Some errors you still have them, so you need to correct these mistakes, all of them. That's the only way you're going to be able to have consistency in profitability. So the first mistake that you're having is moving your stop closer to you're moving your stop loss closer to your entry. Okay, so most traders go in front of the market, you find a good setup, you know whatever that you're supposed to be doing, you execute this trade. Okay, you have predefined your risk, you execute this trade. After executing this trade, the market just goes your way just a little bit. Okay, what you do, you move your stop loss closer to your entry. So now what does the market do? The market comes back and takes you out, and then it goes your way. You have been doing this same mistake again and again and again and again, but up to now you haven't realized that again, after getting an edge, you have to let the market decide whether the trade is going to be a winning trade or a losing trade. The problem that you're having, you want to control the outcome. So if the market goes your way a little bit, just because you do not want to lose, you put your trade to your break even. This is letting you stay in the same loop. That's why you might not be profitable. I want you to look into that. So that's the first mistake. The second mistake is coming out of a winning trade too soon. This is very common mistake. Okay, you have a winning strategy, you execute a good trade, the market is going your way. Okay, maybe you are taking 1 to 2 or 1 to 3 risk to reward. The market hasn't reached really your take profit. We all know that the market doesn't move straight up or straight down, so the market goes up as it comes down. So as the market goes your way, the market hasn't truly reached your take profit. What comes in your mind? You start seeing the market retracing a little bit to pick more orders before it continues your way. What comes in your mind? You end up jumping out of the trade. You end up coming out of the winning trade too soon. Why? Because again, you are afraid that the market might come back, take out all the money that it has been giving you, and then again you end up coming out of the winning trade too soon, and then you leave a profitable trade. So if you're amongst people who are still coming out of a winning trade too soon, this might be one of the problems. That's why you are not profitable. Okay, guys, consider liking and subscribing if you like the video. Again, the third mistake is letting a winning trade turn into a loser. Okay, most of you guys, you really have a winning strategy. Okay, for example, you take risk to reward of 1 to 2. Okay, what do? The market goes to your way. Okay, but again, you fail to take profit because you feel like maybe the market might continue more on your way. What happens? The market starts retracing, so you end up letting a winning trade turn into a loser. Okay, so again, I repeat that when I was starting this video, I said consistency in profitability is a function of eliminating errors, meaning that if you want to start making money on a daily basis or weekly basis or monthly basis, you need to eliminate all these errors. Okay, so if you still execute a trade, the market goes your way and you fail to take profit just because you want the market to go up to 1 to 20, 1 to 30, yet it's not your strategy. You want to take more and more and more. You understand? And then you end up letting a winning trade, the trade that was a winning trade, you end up letting it into a loser. So you do not need to do that. So again, that was the third one. The fourth one, I want you to understand again, letting a loser turn into a bigger loser. This one is very, very common in very many traders. Letting a loser turn into a bigger loser, meaning that you execute a trade, you have predefined your risk. Okay, the market goes your way maybe a little bit, and then it starts retracing. Okay, it comes into your stop loss. So again, instead of accepting the stop loss or the small loss that you might have gotten, you might get from the market, you end up seeing that the market is going against you. What you do, you end up removing your stop loss or putting it a little bit further. Why? Because again, you don't want to lose this trade. You want this trade to win. Okay, and then instead of losing some amount of money, you end up losing actually more than you're supposed to lose. You understand? So this is a common mistake that traders do. you need to eliminate this mistake. So don't let a losing trade turn into a bigger loser. Okay, if you see like the market is going against you, let it take that money and then keep on following your rules. Don't let a losing trade turn into a bigger loser. Again, that is mistake number 4. And then mistake number 4 is jumping into a gun. This means that, again, you go in front of the market and then you start anticipating a setup. The market hasn't fully given you the setup yet. Okay, you end up jumping or getting into the trade early before the setup is fully. Okay, so just because you want to enter early, maybe you want your stop loss to be in a good place or whatever, you end up entering early before the market gives you a real setup, then the market takes you out and then it goes your way. You understand? You have been doing this same thing again and again and again. Up to now, you're still doing the same thing. So all I'm trying to tell you right now, stop anticipating what the market is going to do. You have to follow what the market is going to do. So instead of anticipating what the market is going to do, just observe and see. Because you might be wanting to enter from this order block, yet the market is going to give you an entry from the next order block. So every time you predict what the market is going to do, you're going to end up entering trades early, then you're going to be kicked out, and then the market goes your way. This mistake traders still do it up to now. Okay, so you need to eliminate that. Again, mistake number 6, the position oversizing, position overage, position leverage. You leverage your position too high. Okay, meaning that you're oversizing. You understand? So that truly means that you have some certain amount of money. Instead of risking maybe 2-3% or 5%, whatever the case that you should be risking, you find yourself risking 10 to 15% on one trade. Okay, and then you end up losing that trade, and then you end up finding out that again your whole capital is going to go in only 3 to 4 trades. You cannot do that. The market pays longevity, meaning that the longer you stay in the market, the longer the market will pay you in the future. Okay, so you cannot risk all your capital in just one trade. So position oversizing, traders still go through this. So all these mistakes that I'm talking about, I want you to look at yourself. Which mistake are you still doing up to now? So because if you don't eliminate that mistake, you can even trade for the next 20 years. The market doesn't care how much effort you put in. If you do not do the right thing, you won't come out of the market with any money. So position oversizing, just because you come into the market and you want to get rich quick in 2 days, you end up using a bigger leverage. Don't do that. Or bigger lot size. Don't do that. You understand? Just know that in trading, you will get what you want, but again, it's all about slowly. Again, adding to a losing position. You understand? Some traders still do this. The market is going against you, but again, you still have hope and expectation that the market might still go to your side. You end up adding into a losing position. So don't add to a losing position. Professional traders add to a trade that is already winning, not a trade that is already losing. Accept the losing day and then come back the next day. But if the trade is losing, don't add in any position. You understand? So don't add to a losing position. That was point number 7. So point number 8 is called revenge trading. Revenge trading. You come into the market, you know that you're supposed to do 1 trade or 2 trades. You do these trades, you lose. Instead of walking away, accepting a losing day. Okay, because again, we have all learned that losing is part of winning, losing is part of trading. You can never avoid it, it's inevitable. Okay, whatever that we use to identify an opportunity does not tell us where the market is going. So what does that mean? Any trade can lose. So you go in front of the charts, you execute the trade. The setup has lost. Instead of accepting, what do? Just because you came with expectation that the trade might win, you end up revenge trading. And then in your revenge trading, what happens? Boom. You end up losing more than you're supposed to lose, sometimes even blow account. We all know that a losing trade cannot blow your account, but revenge trading can blow your account. So again, you need to eliminate this mistake also. If you still do that mistake, it's not really a good mistake that you should be doing. You understand? So again, mistake number 9 is hesitation. Okay, hesitation. Okay, traders still do this every single time. Hesitation means you get in front of the market. The market gives you a very good setup, but just because you have been having 2-3 losses in a row, you hesitate to enter this trade. You still want more confirmation. The market end up going without you, and then you end up missing this trade. You understand? Why? Because again, you have been having losses. You are fearing to enter the market, then you end up hesitating. If you don't hesitate, you end up entering late when the market has already gone. You understand? You end up entering late. In entering late, the market retraces a little bit. Your stop loss is not in a good place. They take you out. So again, just because you have been having 3 losses in a row, it doesn't mean that the next trade is going to be a losing trade. So again, you have to understand that you do not need to hesitate. If you see a setup, you take it. Those are 9 common mistakes that traders do every single day. If you have watched this video to reach to this point, it means that you are really serious in this channel. Let me add you one more common mistake. It's called overtrading. Overtrading means you execute a trade, the market goes your way, you get some profit. Instead of walking away, you refuse. Okay, you feel like the market might still give you more. What do you do? What do? You end up doing what? You end up entering other trades. So don't do that. If you take the little that you can, go away, come back the next day. So guys, again, if you have liked this, if you have liked this video, consider liking, consider subscribing, and then also don't forget we have the link of TikTok or Telegram down there in the description. We have live lessons every single day at 2 p.m. New York time on TikTok, so you can check the link in the bio. Consider commenting your thought about what we have talked. Also, you can also comment the mistake that you're still doing up to now. It can also help other traders also to understand that they are not alone. We are all in this journey together. You can comment the mistakes you are still doing up to now, and then you comment also if you want any other video to be recorded in the next future. Okay, consider sharing the video with your friend that you know that is also a trader, so that you can keep on helping each other. See you guys again in the next episode.